Ripple CEO Brad Garlinghouse has announced a major update for the enterprise blockchain company Ripple. And the update has to do with Ripple no longer releasing its XRP markets reports on a quarterly basis. And I want to break down exactly why Brad Garlinghouse decided to do this, why it's relevant, when they started to do this. And it's pretty fascinating, actually, because this was basically done to ensure greater transparency back in 2017 when the company started. However, the SEC turned this into weaponization, and they used it to basically come at Ripple and come at XRP. But from now on, we'll get into that in more details. Hit the like button, subscribe if you haven't already, guys. We're back here for another week. It is May 6th. A lot going on in the markets as we open up today. Markets are pretty red right now at the time of this recording. Not significantly, but definitely a little cool down period right now from the previous few weeks. Really the last month and a half, we've been in a nice little uptrend, but it seems like we're stalling out a little bit right now. We'll see if that continues. Still a long day ahead of us. But from now on, Ripple's XRP holdings will still be published on the company's official website, but the community will now be able to receive updates from the company and XRP via a series of social media and blog posts. So make sure you guys are following all the official Ripple sources on X. They will no longer be bundled within a single report, which will potentially reduce the legal weight of all of their disclosures. And again, Ripple originally started publishing these reports back in 2017 in an effort to ensure greater transparency across the board. But Garlinghouse went on record over the weekend saying that the transparency that was provided by the report was, quote, weaponized by the SEC. And it's worth noting that the regulator, which sued Ripple back in 2020, referenced some of the company's disclosures in order to make its case that XRP is not sufficiently decentralized, to make their case that XRP was a security, not a commodity. And Garlinghouse said, and I quote, "As some may remember, the objective of publishing these reports starting in 2017 was transparency into Ripple's holdings of XRP, which unfortunately was then used against us by the SEC and others," he said. Now, as reported by you today, Ripple's latest report, the last one released in the traditional format, revealed that the company still holds nearly 45.86 billion tokens. This sum includes both Ripple's XRP holdings and the tokens that are currently locked in escrow. Again, right around 45.86 billion tokens. The tokens controlled by the company are worth close to $99 billion at current prices. And the overall market cap of XRP is 122 billion. So they control roughly 100 billion of the 122 billion dollars that makes up the market cap. And a lot of people had issues with this, basically saying, hey, why do they have so much of this? You know, what are they going to do with this? But Ripple CEO Brad Garlinghouse said, hey, it was in escrow the entire time. We were very transparent. You can see exactly what we were doing with this amount of tokens. And basically, in a lot of ways, it was actually helping keep the price stable, especially throughout the lawsuit. But the tokens controlled by the company, again, close to around 100 billion at current prices. And it says, despite ditching the traditional format, Ripple is still, quote, committed to transparency. They're just going to be doing it in a slightly different way. So we're not going to have any more XRP reports necessarily, but Brad Garlinghouse wanted to be transparent, announced this to the entire XRP community. So with that, let's go ahead and take a look at the overall market. We'll take a look at XRP specifically too for you guys. And right now, the market down slightly here in the last 24 hours. Pretty flat, actually, across the board. Bitcoin right around 94K right now. XRP sitting at 209. And we're still above that $2 level. That's, again, something to watch. Now, we are down about 8% in the last week. Still up on the monthly time frame, a little over 1%. But we're definitely coming down here, getting close to that $2 level. Now, if we were to break loose and come down, past $2, I've got my automated buys set. We've here in the last month, we've come all the way down to 165 in the last 30 days. That's a level, a low level that I think we could potentially reach. But I'm more or less looking at this like 195 range. Even if we come down and recapture 195 for a little bit, I'm going to have my automated buys set to go. And I'll take a spot position, but I'm also going to take a short leverage position. That's usually my play here. And I do so over at BTCC. There's a link down below to this exchange. You guys can sign up, start trading with me. I also use BITUNIX as well. So if I pull up BITUNIX, you guys can see the BITUNIX breakdown too. Some great perks on both of these exchanges. These are two exchanges I've partnered up with. Both of those links are down below. Definitely sign up today. Check out both interfaces, see what you like, maybe even use both of them. There's some different assets. And I'm also going to be utilizing my trading indicator, right, to find the best entry and exit points. You can set up your own customized alerts. It's an amazing tool. You guys can sign up today risk-free for the first 30 days. Basically, try it, for $1 a day. If you don't like the product, full refund. But I walk you through how to use it. So we could be getting down to some levels right now where you could be utilizing this indicator, my software, in order to basically find the best entry and exit points. We were crushing it over the last 4 or 5 weeks on some uptrends, but now it's maybe time to buy the dip. We're right on the verge of collapsing down into some crucial levels really across the board. Solana's down to 142, Cardano's down to 65 cents, SWI down to 320. Here comes Chainlink down. SWI's down 7% right now. All right. So again, if you look over on these charts, you might be able to find some great entry and exit points. I show you how I use it too. I walk you through a tutorial when you sign up with XT Algo, so you guys are fully aware on how to set up the product. Super easy to use, and you guys are going to get the same trading insights that I use when making my plays. So again, there's a link down below. Definitely highly encourage you guys to check it out. And one of the things I like to do too is to come here and see which assets have been hit the hardest, right? So Virtual's Protocol down 15%, Walrus down 11%, Radium 16%. You might be able to get some nice bounces, especially once we see a big sell-off like this on some of the top tier assets. I don't like to trade too many assets heavily that are outside the top 100. I usually just try to stay right here in the top 100. That seems to be the best play, to make, because there's that volume and obviously not a huge amount of volatility as well. So a little easier to kind of, mark your spot and take your trade. So I appreciate you guys for watching. I just wanted to update you guys that on what Brad Garlinghouse said over the weekend. And again, the market right now kind of in no man's land. We've been in a little bit of an uptrend, but keep in mind, guys, the summer months usually are kind of low volume months. Now we're still in the springtime. We're going to continue to see kind of how this week plays out. But as things kind of, come to us, I'll give you guys my updates and my insights. So make sure you guys are subscribed right here on the channel so you don't miss out on any of that. I appreciate you guys for watching, and we'll see you guys in the next one.